Morning though. We've just breached 19K. What's in store for us next? Where do we find the next support?
Good morning, Aisha. Yes, I think we've breached 19K, but I think the writing has been on the wall for the last 3 or 4 weeks, at least from a Goldilocks point of view. I think even when I was on your channel the last time, we did allude to the fact that the market was looking very toppish at high levels. We've had enough ingredients of an indication of a possible market top at the recent high, and that seems to have played out really well. The global factors have obviously not helped. The local election jitters seems to be getting discounted by the markets. And we have been working with a target of about 18,900. We are at the doors of it. This is an important support. The market could see a bit of a bounce from here, but I don't think we are out of the woods as yet. There is clearly a lot more downside. There is going to be a lot more price correction and time correction, and the markets are not going to turn around in a hurry, something that we have got used to in the last 6 to 8 months. So if and when 18,900 were to break, I think another 400-500 points downside towards 18,400-500 is quite likely, and one should not indulge in bottom fishing even now. I think there is just too much leadership coming on the downside from many stocks and many sectors, something that we've not seen in a long, long time. And the point which I made earlier, when two big heavyweight stocks like HDFC Bank and Reliance do not perform and actually underperform, the market will always remain under pressure. And to add to all of this, I think mid caps and small caps, given the kind of rally that they saw in the last 4 or 5 months, almost vertical and parabolic in nature, there is clearly a lot more room for downside there as well.
Gautam, I have lots of follow-up questions. First things first, how much more downside?
I'm very clear about the trajectory. When you have strong downtrends, you really do not know the magnitude, or it's too amateurish to even call the magnitude of the downside. I think in terms of working numbers, we actually put it out in our big picture report at the starting of the month that 18,400-500 is the number where we are looking at serious support coming in. Not to say that it will be the worst case. I think the chances of even this number going eventually is pretty high, but we will review around that point. But I think having said that, I think this is the time to be conservative. This is the time to be cautious. This is the time to be in the top 100, to be in top quality, because I think not just India, I think global markets are under pressure. I mean, look at the Russell 2000 in the US. It's near a 52-week low. People talk about the Dow, people talk about the Nasdaq, the S&P 500. Those indices might not be as relevant in the Russell 2000. Look at some of the Asian markets, the kind of breakdowns that we've seen. Look at the way some of the European markets have behaved in the last 1 month. So it looks like a global scenario right now. And unfortunately, given all the geopolitical developments, it's only fair that the markets react this way.
Okay, fair enough. Given that you're saying that, Gautam, let's talk about individual sectors then. Given all that's transpired within the banking space, what's your outlook as to the pecking order now within the entire banking space and the important levels that you'll be tracking on the Nifty Bank itself? Will it be pretty much neck to neck with the Nifty?
Bank Nifty has taken leadership on the downside. I think it's pretty clear. And unfortunately, there is no pecking order because just about everything in the banks are looking weak, whether it's the private banks or the PSU banks. And the Bank Nifty has a lot more room on the downside. In fact, we would not be surprised to see a test of 41,500 in the near term and possibly 40,000 and below, over the next a few weeks. So banks are really the problem. In the good times, they underperformed. They did not move hand in hand with the Nifty or the overall market. And now in the difficult times, they are leading the market down. And the problem is these are heavyweight names. Even if they fall 3, 4, 5%, it can have a very large impact on the entire market. So unfortunately, no signs of bottoming out. In fact, the Bank Nifty chart, even at current levels, is quite negative. So I would just completely stay away from the entire pack and move to the defensives. We like pharma, we like IT to a certain extent, we like gold and silver, which has been our contrarian bullish view for a long time. Everything else more or less looks like it's going to see a lot more downside.
So Gautam, when the downside gets arrested, today, tomorrow, this month, next month, it'll get arrested. Do you think the market leadership will also change? Because post-shakeout, the leadership has always changed in the past.
I think that's what has been engraved into us, that every time the market will see a correction, it will quickly turn around or it will quickly get arrested. What if this is a slightly longish correction, given all the geopolitical developments that we are going through, and the fact that you have assembly elections coming up, and the fact that you have a general election coming up, which will be fiercely fought? Given all of these factors, there is a very high probability that the market actually does not make a new high for a long period of time. So in that kind of an environment, I'm sure a lot of market participants are going to be uncomfortable because they are used to seeing the Nifty going through a correction and coming back immediately, and all is well very quickly. This time, it does not seem, looking at the weekly and the monthly charts of the market, that it will happen in a hurry. Not to say that the market will fall very big, because there is still 16,000 crores of SIP money coming in every month, which will get deployed, and which is a structural a reform, if I may use that word, that's happened over the last 3 years. So that will probably protect our market. But given the global scheme of things and given the global charts, it seems that the market will not get arrested in terms of this downtrend very quickly.
Gautam, two stocks that you highlighted, Reliance and HDFC Bank, without which the index can't do anything. Fortunately, that's not been the case in the run up to 20K, because these stocks continue to lag and the index has done whatever it has. Having said that, on the way up, the stocks not performing is not really going to help the index. But tell me, what's your reading on Reliance and HDFC Bank? Will they continue to underperform?
I think they will continue to underperform. And as I mentioned last time during our interaction as well, the best way to understand them is not in absolute terms, but in relative terms. So if you actually divide a HDFC Bank by the Nifty, or divide a Reliance by the Nifty, you get something called a ratio chart. And that ratio chart has been downward sloping for weeks and months and quarters, in fact. So given that environment, I don't think a turnaround is happening anytime soon. And interestingly, a stock like HDFC Bank, which is heavily over-owned and is being talked of as the next big 5-year, 10-year story, for whatever reasons, fundamentally, which I'm sure is justifiable. But from a price action perspective, it does seem that this underperformance, which has been on for the last 18 months, is here to stay. Because still the markets don't bottom out, I don't think these stocks are going to take leadership anytime soon. So there could be easily 10% downside in both of these stocks from current levels, maybe 15% on the outer side. And if that were to play out, it's not going to help the Nifty at all.
Gautam, so the first rule of technicals is you should always sell the weakness and you should stay with the strength. So when you say markets are looking bad, is it time to sell the weakness? Is it time to go short?
Nikunj, to be honest, it's been time to go short for the last 3 weeks, because we've already seen a 1,200 point fall, in the last 3-4 weeks. We are at the doors of that important support of 18,900, which is where the 200-day exponential moving average is as well. And there is a bit of a mini panic, or I would say a selling climax, given the fall below 19,000 today. So I think short selling at 18,900 levels might not be the best idea. But in a downtrend, you sell the rally. So there will be pullbacks from time to time. You will get those 200, 300, 400 points, recoveries from time to time. Sell them, because I think the market has created a very solid ceiling at levels of 19,400, 450. Until that does not get violated, I think 18,400, 500 is coming after maybe a pullback from 18,900.
Your view is very clear. I mean, this is your view that for the year we've peaked out.
Year and maybe more.
Okay. What could be the out of jail card for the bulls? You remember that monopoly term, out of jail?
I would love to use that card, but given what I'm seeing on the geopolitical front, I keep saying this, as a global citizen, I'm extremely concerned. And as a financial analyst, I'm equally concerned, looking at the fact that the equity markets, or financial markets in general, have started to discount the same. Look at what gold has done. It is at the doors of 2000. Look at what Bitcoin has done in the last 2 weeks. It is an indication that the market, financial markets, are worried about the geopolitical situation. And it's only in the last 2 weeks that equity markets have, aligned to that. So what could be the out of jail card for the markets if this geopolitical situation stabilizes? At some point of time, out of magic, I really hope it happens. I think that will probably be the best thing. But having said that, I think this assembly elections will be an equal bigger problem, because I speak to a lot of large HNIs and corporates, and I think people are a little concerned about the assembly election results. So people want to go a little light. So I don't think smart money is going to come big into the markets till those results are not out.
Good to get your take really on the lay of the land, really, in terms of where you see the markets headed, as well as some of those key events. So a fairly cautious stance, more downside towards 18,400 to 500. Gautam, good to have you on board. Thanks so much for joining in on the show. Tell you what, we'll come right back. We'll slip